Inflation data is coming out very soon, and you know what that means: a lot of volatility in crypto. In today's video, we'll be going over some of the repercussions of this data, and we'll also be talking about what the Fed Chairman Jerome Powell said that will influence the crypto markets. We'll then be taking a look at some of the longer time frame charts, potentially identifying some trading opportunities, and then of course, the biggest news in the space. If you enjoy the content, make sure to smash that like button and subscribe. Let's jump right into the video. Let's kick us off with this. As we can see, the fear and greed index is at 35, signaling a lot of fear in the market currently. And part of this is because Bitcoin is struggling to move up after holding this support level. We got a pretty reasonably sized red candle recently, and we're now trying to hold this level as support. I put out this tweet yesterday talking about the potential scenarios, and if Bitcoin were to close the daily candle looking like this, which is what it looked like, we would likely retest around the 92K area. But thankfully, as we can see, we still closed above it, and now today's candle is green. So if you're considering a trade here, I would wait for some kind of resolution. If we are to bounce around this level after we get the inflation data, and maybe we break below, but then we move higher, I would be targeting the 99K level for a Bitcoin long. But if we are to break below this level, I would once again be favoring shorts down to the 92K area. So as you can see, this would be a pretty big move, and you can likely book some nice profits with a short should we breach this level. It's going to be a little bit tricky to determine here because there's a lot of volatility whenever we have these meetings. And so I would highly recommend that you manage your risk accordingly and you're not using too much leverage, especially when we have these meetings, because as we know, the volatility can be insane. And if you're looking to trade any of this volatility, make sure to click the first link in my description. It will bring you directly to Weeks. There's currently a very special promotion for you where you can get $100 for free just for connecting your phone number with your account. Yes, you heard that right. And for those of you that are active traders, if you deposit $200 to your futures account, you also get an additional $100. So that's $200 for free just for signing up with Weeks. Don't miss out because this promotion will not be lasting forever. So what is there left to say about Bitcoin? I mean, honestly, we've just been bouncing around this level for quite a while, and unless the inflation data comes out way higher than expected or way lower than expected, I don't anticipate this will have a significant impact on the market in the medium to long term. As I mentioned, volatility will surely be there, but that's always the case when we have these kinds of meetings. Now, looking at some more interesting data, what we can see here is that retail is completely flushed out of the market at the current moment. As we can see, this chart represents the retail investor with volume between $0 and $10,000 and the demand over a 30-day change. All the way down below here, we can see this red level, and we actually reached this level last time around May of 2021. That level coincided with the bottom of the huge drop that we saw in the previous bull market cycle. As we can see, there was this first peak over here, we dropped down, and then the retail investor volume hit an all-time low, and then we pumped much higher. And so there is a possibility here that this could signal a new bottom in the market before we are to move on much higher. I've shared with you across many videos that it is well within my expectation that Bitcoin will be moving much higher this year, setting a new all-time high somewhere in the mid $100,000 range. And when I look at charts like this, it only really confirms my bias. We have some more charts that I need to show you in this video that are also very important for you to consider. There's this one over here that essentially just shows the fact that Trump has bought $5 million worth of Ethereum once again, and he is not slowing down. Do you really think he's buying just for the heck of it? No, he plans on making money on this, and for him to make money on it, of course, Ethereum will likely trend higher, which is in line with my expectations of Ethereum outperforming Bitcoin over the course of this year. Something else that is very interesting is that we're seeing the other ETFs starting to sell, but BlackRock continues to accumulate. Fidelity is selling, Grayscale is selling, Invesco is selling, but BlackRock just bought $50 million worth of Bitcoin. They want as much control over the market as possible, and so they just keep on aggressively accumulating Bitcoin. You need to always have that in the back of your mind. If you don't own Bitcoin, what are you doing? And taking a look at the time of the meetings, I'm now recording this video about an hour and a half before the meeting. It will likely go live once we have the inflation data coming out. But as we can see very shortly, we will be getting the core inflation rate and the overall inflation rate. This will likely not impact the market as much as people are really thinking it will, unless there's some kind of crazy movement, as I discussed. And to discuss further about the Fed, there is something we need to address. On this channel, we've always talked about Ethereum outperforming Bitcoin once we enter quantitative easing. But the only issue that I'm seeing here is that there's still no reason for the Fed to actually enter quantitative easing because everything looks fine. Their goal is to keep inflation under control. And if inflation is still staying steady, there's no reason for them to start printing more money. Now, if you want some perspective as to how they did it in the previous cycles, I found this tweet that explains it perfectly. So basically in September 2012, the federal fund rates was already at a target range of 0% to 0.25%. It had been at this near zero level since December 2008 in response to the financial crisis. So the Fed was already operating in a very low interest rate environment when they announced QE. March 15th, 2020. This is where it gets a bit more interesting. The federal fund rates was initially set in a target range of 1% to 1.25%. However, in response to the rapidly escalating COVID pandemic, the Fed took emergency action and lowered the rate to a range of 0 to 0.25% on this very same day. So here's the key takeaway. In both instances, the Fed announced quantitative easing at times when interest rates were either already near zero or were quickly being lowered to that level. This highlights how quantitative easing is used as a tool when traditional interest rate cuts have limited effectiveness. So what you need to consider here is that because the rates are nowhere near this level, it looks like we won't be getting quantitative easing anytime soon. However, if the Fed stops reducing their balance sheet and they don't necessarily start expanding their balance sheet, quantitative tightening can still end without quantitative easing starting, meaning they won't be necessarily printing more money and adding to their balance sheet, but the market is likely in a better position for more speculation in terms of risk assets such as stocks and, of course, further down the risk curve, crypto. And we heard it from Jerome Powell himself. We would use quantitative easing only when rates are at zero. We are nowhere near zero. But as we said, if quantitative tightening does see an end and we don't necessarily enter quantitative easing, we can still get the altcoin season that we're looking for. It's not the only determinant of altcoin season. Now, what this would look like would be something like this. We saw that in the previous bull market top in 2017, the following bull market, we surpassed that top on total 3, which is all of the cryptocurrencies outside of Ethereum and Bitcoin. We surpassed that top massively and set a new top into 2021. Then this cycle, that previous top started acting as resistance. And as we can see, if we zoom in a little bit lower, we have since fallen down below. But I wouldn't give up on it quite yet. I firmly think that we will experience a period where we break above this range and altcoins really start to take off. Right now, we're seeing a whole bunch of new memes launch, and of course, all of those memes are getting rugged, sucking liquidity out of the entire market. Once this is resolved and QT ends, that is when we can expect this kind of movement. Now, you'll notice that we said February of the post-halving year is when it usually happens. It doesn't necessarily have to happen this month, and honestly, it's not my base case for this to happen, seeing as how monetary policy is currently affecting the market. But in the next few months, it's very much a possibility. Now, in the meantime, I'm actively trading these markets and trying to accumulate as much capital as possible. And I do so by trading the price of Bitcoin and, of course, some altcoins here and there. I mentioned in one of my previous videos that I will be shorting new listings because typically we see a huge dump as they get listed onto major exchanges, but that's another topic. Basically, if you want to trade with me and take advantage of all the opportunities that this market has to offer, you need to sign up to Weeks. It's the first link in my description. And as I mentioned, you sign up with just an email and a password. And once you connect your phone number, you literally get $100 for free. Those of you that continue to trade, you deposit $200, you'll get an additional $100 for free to go towards your trading account. And that sums up today's video. Let's see how the inflation data comes out, but I don't think it will have any kind of tangible impact on the market unless we see some crazy numbers. So make sure you're managing your risk with this upcoming short-term volatility. And if you enjoyed the content, make sure to smash that like button and subscribe. I'll see you in the next video.